Hey everybody, welcome back to Complete Trader Academy's daily review. Today is February 15, 2023. All right, let's hop right into it here. So we got this candle here, right here, opened up, came down, rallied up, and then closed. This is now the next day candle opening at 6 p.m. Eastern time. So we're talking here. All right, so price came down and pretty much balanced most of this wick here. Didn't take out that low, which was the previous low of yesterday, which would have been obviously Tuesday. So then the price came back to about an equilibrium here, roughly. And then we do have this big wick here. So what I can see happening is we do come back up, at least to the open. We do have this level right there. We have the halfway part. But I'm not even going to discuss anything above here. I'm going to stick to a bearish side, even though it's still bullish. Take a look. You got low, got the high, got lows again. But now these are too clean right here. So again, this is a consolidation. This is starting to expand out. So, you know, let's take a look into a smaller time frame here. Let's go into a 5-minute. You won't be able to see it too clear with a 5-minute, but let's take a look here. So as I was discussing yesterday in the previous video, please watch previous videos so they make sense, but we did have that high, and I said I could see price coming back up to take it, right? And then we had this price imbalance here, and then we had that high. Now I didn't expect it to come this high, and I didn't necessarily say it had to come here, but I liked it because it was a midway point from this high to this low of range. And then, you know, as it's building and engineering, liquidity on both sides, which is the low and the high, which is the low and then obviously whatever it makes here, right, as a high. So let's hop it into it. So as we also, when we closed yesterday, when we opened up, we made a gap. So you extend your gaps far, and you'll see that price will, even though it hit it here and it sealed it, doesn't mean that price won't revisit it, right? So that's kind of what it did here. So we had lows, lows, lows in Asia, and then London kicked in, started creating highs, took out that gap again. But we do have this price imbalance here. You see that? So this is kind of like where your eye should go to. It's a little bit of a sore thumb, right? So, and then to finish this price imbalance here, you have that, you got that high, you got this high, not the high, you got this low of this candle. See that? So sure enough, once it comes into here, this supply block becomes a more balanced price range as far as its ceiling price. So that's a target for me, and so was this low as a target. So when the price came up here, we had a nice bullish candle, but this is at 710. It's still too early. Could have caught a lot of money coming down this way. I wasn't involved. And then I started to see all this chop at 9:30. So I decided to wait and see if it was going to take out the lows here, which it did, but then it started chopping hard, and it did not take out this low. So, because I was assuming that we would have took out this high before we took out this low. Well, sure enough, it didn't take out the low. And when it rallied back up and then broke above this high, this short-term high, that's a shift in structure. So this is normal. We see this every day. You see them in my videos every day. So they're leaving this to dangle the carrot. So when the low doesn't take out that previous low, it turns into a demand area, meaning they use it as engineering more liquidity, so people can get in and get involved, and leaving this low intact, previous low. So because their goal is going to come back down. Now it doesn't have to happen all in the same day. It can happen in days from now, but in general, that's what was the purpose. So when I saw it not take it out, this is a good red flag for you to say, okay, let's wait for a shift. So when it did shift, all right, it shifted. You got a low here and a low, two short-term lows here. So if you use your fib, okay, and you well, this fib, the the general retail fib, you can come back into, this is a 70, and it leveled nicely, and you don't have to, you can just be a buyer right there, or you can wait for order flow to come back up and come back in, which is what I usually do on the safe side. Let me go into a 1 minute so you can actually see this more clear, and then you'll see here, see this, see that even if I shrunk this and you don't have any colors on the candles, can't you see that there's a shift in structure? Low, high, low, high, low, high. See that break right there, that subtle break right there? Low, high. You're starting to create too many breaks up. Now they get you in with these lows right here. See that? But then this is the real A to B to C. They do this A, B to C to get you in, right? But you're gonna need some type of liquidity purge here for it to say, okay, now we can go back up because the manipulation has been accomplished. So that's what this is. These lows here and this price imbalance here, this is set up for you to get in, and then for you to get taken out, right? And then continue with their agenda, because by here you're out of this trade, and by here you think it's going down. So it's a psychological warfare in this industry, obviously. So, but once you know, take a look here. So price came down and smacked this last demand block to the low side, right? Look at it. You see it to the T. See that? See that? Perfectly. So you could have been an automatic buyer right there, and you're at the 70, and or just wait for some more order flow. Well, I did. So came back up, came down, came back up, and then came back in. See that? You're a buyer as soon as it comes back in the block. All right, and then order flow continued, and you could have been a buyer. To be honest, US 30 was very, very dirty today, and I was actually looking at the S&P, and the S&P was super clean. Which, I mean, I even might want to start trading S&P way more often than even US 30. And it's not because I can't trade US 30, it's just because if you look at the S&P, it's just super clean. And you know, my models of trading is just much easier in S&P. I like the US 30 because it's fast, and the volatility and the ranges that you can catch. So that's why I like US 30. But lately, and I'd say in the last like 6 months or less, it has been a little dirtier. It's been harder to see these models. But anyways, price came down. You could have been a buyer as soon as it took out these lows and got into this 50% of this down movement here, and then price comes back down into this imbalance, and it gets right there to the top of that. You could have been a buyer there. You could have been a buyer here. You could have been a buyer here. Could have been a buyer here. Could have been a buyer here. Could have been a buyer here, and so on. And then if you use your 50 projection fib and you measure the retracement backwards, it'll show you a level of taking it all the way to 4 standard deviations, which is very close to this line that I had for that price imbalance over here. If you remember in the beginning of the video, right there, right to the T of that block. Let me go back to a 5 minute. See that? So measuring the retracement there will take you all the way to 4 standard deviations and the high of the day, and it takes out all this imbalance of price, and that's perfect. All right, so that's pretty much it for this video. And then as far as what's going to happen tomorrow, now let's take a look here. You got, what do you have? Let me just delete this. Just delete this. So what do you have here? You have this high here, which it almost took it while we're on the video. You have this high here, very close. Does it have to? No, but probably will it? Probably, yeah. So it'll end up coming up here, probably taking out this high, unless it wants to take its time. And then we have this low. This low is still going to be in effect, and it's going to, again, this is going to get very tricky. So let me go to an hour real quick, just so you can see this. Actually, a 15-minute will probably be better, but you see this? So clean price action, sealed it here, got the high here. We got this wick. You could even come up to halfway between this wick and this high. It doesn't have to come above here. Can it? Sure. Can the news do it? Sure. But I like this area if it wants to keep going. I do like this high. And then if it doesn't want to reach here, and if it wants to protect this high, okay, if it wants to protect this high and then break down, then I would see it just breaking down like this now. Not like this second, but like obviously and it'll leave this high intact, and it'll just kind of just come down, and you'll start getting into this area here. All right, so hope this helps. You guys take care, and God bless.